Hello, guys. It's another month. We have to check how good or bad our portfolio did. It has been a very interesting month. By the way, before I carry on, remember this is not financial advice. It's just me talking to the internet. Hopefully, I can share some knowledge to all of you. I would like also to say I will like a lot if other X accounts, Twitter, or YouTubers. I don't consider myself YouTuber. I'm just playing here with some dividends on the stock market. If they post the real performance they're having, because I'm seeing many X accounts, I'm seeing many YouTubers, and the only thing they do is post garbage, in my opinion. It doesn't matter if you talk about that company or the other company, or this is good or this is bad, if you don't provide real evidence of when are you buying, what is your entry price point, how are you managing your portfolio. The only thing I can see is clickbait and garbage. I have to say it, because I like to believe there are many investors who are honest. Obviously, like many of us, we admire Warren Buffett, Howard Marks, David Einhorn, and I highly believe those guys are honest. They could make mistakes in life, and they could do things wrong in other fields in life, but um, again, I believe they're honest. And when I go through X accounts on YouTube, oh my gosh, it's pure garbage. But I know they do it for the clickbaits. This channel is not, first, is not a clickbait. Second one, I never ask to like or subscribe. You can do whatever the fuck you want. Um, I said a couple of times as well. I think this channel is some sort of a niche because I'm sharing openly what I'm doing. If you like it, watch it. You don't like it, don't watch it. I'm not bothered. But you can see how good or bad the performance and the yield is doing compared with the market, compared with ETFs. It's pointless for me to share some buy these companies because it's in the 52-week lows, whatever. This is nonsense. So I understand could be some information into those videos, fair, okay, but then they ask, or they are willing for you to go into their newsletter and this and that, and then well, listen, okay, let's go to check the portfolio and fuck the rest. Right, last month, and well, also I would like to say I know it's the 5th of April, but this weekend, and I have things to do in life. I cannot really. I know record a video doesn't take me long, but I want to. I have to do other things in life, and I wait till today, Saturday in the morning, to record this video. Right. So, um, this is the last month. This is what our portfolio did. Is plus 0.05%. On top of that, obviously we have the dividends. So whatever performance um, you have here, especially if it's yearly, you need to add if it's a total return is around 5% per year, not per month, per year I'm talking. But anyway, I'm doing it per month because my goal is invest £100 a month minus the dividends. So if I get £50 in dividends, as an example, I will just top up with 50. Okay, I hope this makes sense. And what I'm doing now is I'm buying every week, so that money in the because when I get the dividends, if it's at the beginning of the month, I have to wait 3 weeks, and the money's there doing nothing. So I start to do buys every week. Okay, right. So um, the dividends we got last month are these ones. It was pretty good month at the time to get dividends. Kroger, Pfizer, IDM, 3M, Tyson, Realty Income, Mercury, Tuxi Rule. That's all the companies we get the dividends. So it was quite a lot. And the buy orders we did was this. So Petrobras, National Grid, Dollar General, Petrobras, Pets at Home, Dollar General, and Dollar General. I post in my X account Petrobras because it was a ridiculously high dividend yield, and I want to push the dividend yield of the portfolio up. I say as well, I'm completely aware they will cut the dividend at some point, but risk reward, I think it was a good buy. As you can see, it's just £10, so nothing crazy. National Grid as well. The company dropped a bit. The dividend yield was over 5%, so I have to buy it. Well, I bought. Dollar General, defensive company, when well, most of these buys, especially National Grid, uh, Pets at Home, I think I will consider as well a defensive company. But Dollar General, if it's a recession, as it looks like it is now, since the beginning of this channel, everything is pointing out of we're going into recession, as it's happened now. It's a defensive and should perform better than the market. That's why Dollar General was actually one of the first buys I did. I keep adding more shares now. Then Petrobras again, Pets at Home. I think it's a completely undervalued company. The dividend yield is over 5%. I think the P ratio was about 11, 12. Also, I check other metrics, how did or bad they did during the pandemic. And I think it's a very interesting company to buy with the current market situation, because if you think about it, and this is not I'm talking more like a quality company rather than the numbers, because I think the numbers are great. For many people, or for most people, pets, cats, dogs, whatever other kind of pets people have, are like part of the family, especially here in United Kingdom. So they keep buying things. They keep buying medicines or toys or whatever from or for the pets. So this company, I think, is going to perform pretty good during the recession. Plus, valuation is low. the dividend yield is high. I check other metrics, and I think it's a good opportunity. I will keep buying more if the prices go down. Yeah, and then Dollar General, Dollar General. Right. So once again, this is the performance. Now we are going to 0.05. We're gonna write it down here. 0.05. We might need to put a plus just in case. So this month we win. Now, current dividend yield is 5.24. I already write down the other ones, so it's 5.24, and our portfolio win as well in performance and yield. You can check here the other ones if you think I'm lying or whatever, but I don't give a fuck about lying to this channel. So currently the Standard & Poor's is the yield is 1.34, and the last month went down 12%, and I wrote down here as well, as you can see here and here at the bottom. The good thing is, because our main competition is always Standard & Poor's high dividend yield, and Standard & Poor's high dividend yield last month did a minus 10% pretty much, and the dividend yield is now at 4.49. So yeah, we will see. We'll have to keep beating this. Okay guys, so this is everything for now. Here the portfolio, the first positions, obviously, as you can see, is super defensive portfolio, and I think it's now time to start to rotate. Well, I need to see which companies I want to buy. I saw a few companies in England that I like here in United Kingdom, but it's time to start moving the portfolio from defensive to more aggressive. That's everything for now. Thank you for your support. If you are still there, I hope you are having a very nice day. Remember to call your parents. Remember to take care of your friends, take care of your girlfriend, take care of animals as well, very important, the animals. And I will see you soon. Bye.